The market has given a clear thumbs up to the quarterly earnings posted by ICICI Bank. The stock rallied more than 10% in trade, and in doing so, it became India's fifth largest organization, surpassing HUL by terms of market capitalization. That's the kind of results reaction that we have got from ICICI Bank. So it's important to look at how this particular stock is placed or positioned amongst the large cap banking names. Important to point out that Sandeep Bakshi, who's the current MD and CEO, had been appointed for this role on 15th of October 2018, and that's when the re-rating of ICICI Bank actually started. If you have a look at the performance ever since that day, ICICI Bank has been the best performing stock, in excess of 150% return for that stock ever since he has taken charge, followed by AU Small Finance Bank as well as SBI, which have given you near double return from that particular point. And then you have Kotak Bank and HDFC Bank, which are not too far behind with about 65 to 85 odd percent each. Axis Bank also 40% plus return for that one, and IndusInd Bank amongst the large banking names which has been under pressure, down about 25 odd percent since that particular time. In terms of the valuation picture as well, it is positioned right in the center of the table, because you have Kotak as well as HDFC Bank, which command a premium over ICICI Bank. However, Axis, IndusInd and SBI have a discount as compared to ICICI Bank's valuation. If you compare each of the stocks to their 5-year average, you can see that ICICI Bank clearly trades at a premium when it compares to its 5-year average as well. So let me highlight what the valuation picture looks like. Kotak Bank on a 1-year forward quotes at more than 4.5 times book value, HDFC Bank in excess of 3.5 times, ICICI Bank in excess of 3 times, Axis Bank trades at 2 times, and IndusInd along with SBI are sub 2 times book on a 1-year forward basis. And the analyst community was quite pleasantly surprised with the numbers that are posted by ICICI Bank. In fact, more than 50 analysts who track the stock, all of them have a buy rating on the stock, and the return potential ahead of the results was as high as 10%, and that gap seems to have been covered in one single trading session, which is today as well. And the shareholding pattern also, that was positioned very nicely, because FIs had interestingly increased their stake in the last 1 year. So currently FIs hold about 47.3% on in ICICI Bank as compared to 45.7% in the same quarter last year. Domestic institutions own about 27.2%, which was marginally up from 27.1% in the previous year same quarter, and retail participation has seen some bit of downtick, marginally I would say, at about 7.5% holding as compared to 7.9% holding in September 2020. But overall, it has been a great set of numbers that were posted by ICICI Bank, and the street clearly rewarding the good set of numbers with an uptick of more than 10% on the stock.